Alright, in this part of the video, we're going to take a look at getting some things set up for you to be able to start. Okay, so here in the instructions that you were given is the chart of accounts. You may not use other accounts besides what's in the chart of accounts. Okay, and so you should familiarize yourself with what they do have. They do have an inventory account, 115. They have the cash, that would be the checking account, 111. Accounts receivable, okay. There's accounts payable, sales tax payable, payroll tax payable accounts. And then the employer cost accounts, SUDA and FUTA payable. Wages payable would just be used for adjustments. Okay. They have sales returns and allowances, and sales discounts. We will be using those. Now, because I want you to be on the perpetual inventory system, we will not use purchases, purchase returns and allowances, or purchase discounts. So you can scratch those three accounts, or freight in either. Any freight in would go into the inventory account, and any purchase discounts and purchase returns would be subtracted from the inventory account. Notice that there is a wages expense for the sales clerks and a separate wages expense for the office people. Okay, let's see what else we have here. Here we have a rental income. This would be an other income on the multiple step income statement, and so would interest income. Okay, interest expense would be an other. Notice how they've given all of these accounts down here a 7 or an 8 number. Those are going to go in the other section of the income statement. Anything with a 5 goes into is the cost of goods sold. And what you need to do instead of purchases, we'll use account 511 for cost of goods sold. Then you won't have 512, 513, or 514. Then 6 starts the regular operating expenses. Okay, so when you're setting up your special purpose journals, you need to use accounts that are on here. So let's take a look at our special purpose journals. So here's our sales journal. We have accounts receivable. We do have that account. We have a sales account, and we have a sales tax payable account. So that is good. Let's take a look at our sales account. Do we only have one, or do we have a sales for different departments? No, we only have one. So we are good to go with that. Okay, so our sales journal shouldn't need anything more. Our purchases journal, we're debiting inventory, crediting accounts payable. We have both of those accounts. We're on the perpetual inventory system, so that's what we should be doing. So we can use it just as is. You can add other things if you go through the source documents and you see, oh, we have other things we're purchasing on account besides inventory. You can add account names for those other things on here if you want to. Here's the cash receipts journal. So here we have a cash debit and a sales credit, sales tax payable credit, so that's all good. We have an accounts receivable credit, that's good. a sales discounts debit, that's good. And then other things can be put in here. Now you can go in here and add other columns if you want for other things that we're receiving. We saw in part 1 video that there's a point where we're receiving some rental income. Now you can set up a column and call it rent income. And then you'd be debiting cash and crediting rent income for that if you want to. Or you can put the rent income in this other, you would say rent income, the name of the account. Not what is this, not an explanation of what's happening, but what account are you going to debit or credit. And then the amount that you're going to debit or credit to that account. Here's our cash payments journal. So here there's a cash credit. We definitely need that. An accounts payable debit for when we're paying off vendors, so that's good. Inventory debit for when we're purchasing inventory with cash, so that's fine. Here's a phone expense debit. We may or may not need that column. You may look through the source documents and see that, yes, there's something like advertising that maybe we pay 2 or 3 different times. We're paying a check out on advertising expense. And so we would then want to look at our chart of accounts. Here's advertising expense, account 613, and we would want then to put advertising expense debit instead of phone expense debit. Here I have a utilities. Maybe their utilities are handled a different way as well. So you can make up a whole bunch. Maybe you want both of those, but you also want an advertising column. So go through the source documents, see kind of what kinds of things are we paying cash for. We also saw in part 1 of the video that we paid for the mortgage payment, and you can make up a column called mortgage payable and one called interest expense, or those can go into the other. You can take 2 lines up to put mortgage payable and how much goes in there, and interest expense and how much goes in there, and keep them in the other column. So that's up to you. If something happens more than one time during the month, probably the mortgage is only one time during the month, so it doesn't matter if you put it in other or you set up columns for it. But if something happens at least twice a month, then you're going to definitely want to set up a column for it. And just insert an extra column, put the name of the account and whether you're debiting or crediting it up at the top, and then you could have your cash payments journal set up in a way that's most helpful to you. Okay. Another thing besides the journals that we need to set up, and of course you'll have to set up your ledgers, and you can use the Pony Rides to Go ledgers. I have one big cash one, although you don't need a big cash one, because unlike Pony Rides to Go, we don't have 15 million general journal entries to post. Your posting is going to be a lot less than Project 1. But you'll still need, so you can just use the regular ledgers that I gave you for Pony Rides to Go. Don't even need to use the cash one, and set up a ledger for each one of these accounts. Except remember, purchases will now be cost of goods sold, and we won't have 512 or 513. Okay. Here in your instructions, you also had a list of our customers, and we've got 12 customers to set up. 3 of the customers have a beginning balance, so you'll need to go into your accounts receivable ledger. So here's our accounts receivable ledger, and you will set up, I have 12, in fact, ledgers set up for you. So under account, you'll put the name of each customer, and also, you know, you may need, for a few of them, you may need more than 3 lines. So you know, of course, to just put your cursor there, and you can go ahead and enter and have another line there. Down below, here's the accounts payable list. And so these are our vendors. We have 7 vendors, and 5 of them have a beginning balance. So we'll have to set those up. Here's your accounts payable ledger. Again, you'll set up an account for each vendor. For those who have a beginning balance, you'll put that balance in here. And you'll have a few extra ledgers for those that are just end up being blank. And again, if you need a few more lines, you can do so. Okay, so once you have your accounts receivable and accounts payable ledgers, your general ledger set up, and your special purpose journal set up, you should be then ready to go to start putting things in. All right, I am going to put in, I'm going to put in this Denise Hogan. So this is just for purposes of videoing. Okay, I've got Denise Hogan there. She doesn't have a beginning balance. Okay, so I don't need to put that in. And let's see, apparel outlet, I'm going to put them in. All right, and they have 4587 is their balance. All right, so in the next part of the video, we'll actually go through a couple of different transactions and how to put them in and post them.